Hi, folks. Nick Shaheen here, recapping the week ending 5/8. Um, Pretty eventful Friday. The week ended on a super note. Markets were up 1.5% basically, except for the small caps. So yes, it was a huge win for the bulls today with regards to the scoreboard, but there were a couple of hitches there. One is that the small caps lagged they were half as exuberant as the broader indices. Also, the mid caps. So there's a big basket of stocks that really represent, quote, the market better than, the 30 in the Dow, for example. So that's one knock. The other knock is that late in the day, the SPX made a run at an all-time high close, and it fell short. If they were so exuberant, they needed to close just above this, I think, for an all-time high close. Yes, it closed at 21.1610 cents. That's fantastic, but in the grand scheme of things, if they were so exuberant and Apple was doing its darndest, look how strong it closed, they still couldn't get those extra few pennies they needed to hold on for an extra minute or two, and they just couldn't do it. So where's the conviction? What was this? This was a relief pop in my book. How do I know that? First of all, the VIX got crushed at the open, down 12, 13% immediately. It closed actually down 15%. So the VIX now is closer to 12, and so anytime it approaches 12, we have a sell-off in the market of some sort, or some hesitation. So it was more a reaction to the jobs market. Jobs report came in line, but for some reason, everybody ignored the fact that they reviewed March's numbers down to 85,000. Can you imagine what would have happened had we had an open session where, first of all, the jobs report was just over 100, which what it was, but that was Good Friday when the markets closed, so we got a pass there. And then the review today was down to 85,000. That's it. Can you imagine in an open market session what the reaction would have been like? So basically today was the opposite of that reaction. They were all relieved that the jobs number came in line and that the ADP was wrong earlier this week. So everybody was relieved. Why? Because they didn't tell us, this doesn't tell us that in fact that rates are not going up. It doesn't tell us anything with regards to the macro. Changes nothing. It doesn't tell me that Apple's going to make more money. It doesn't tell me that Yellen's not going to raise rates. I can tell you one thing, that she's not raising rates in June, but she's raising them this year. September, December, you pick and choose. I know it's going to happen this year, not in June. So today was relief that, thank goodness, the jobs report is not a disaster. Thank goodness, that's number one. Thank goodness the jobs report is not over 300, because then they would have said, oh my gosh, she's definitely raising rates. So this is kind of like blinders continue to be on, and the fight over the meander continues. For the past few months, I can't remember when was the last time where we had a definite direction. I've been saying iron condors, that's how I'm creating income, and that's what's going to continue. Why? Because I see support below, resistance above, and magnets in the middle. So the 2100 continued to be a magnet, pulled us down to it, and then overshot down to the downside. The 2050 was support on the SPX, pulled us out from it with that one scare pre-open yesterday, I believe. So the meander continues until it doesn't. So what I do is I go out in time and give myself some room, and I do some iron condors, and I generate income while I wait. That is my preferred method on how to trade these markets. I do not want to put money in the face of danger. I've got a lot of shoes to drop. I've got China. No, we didn't talk enough about the fact that China had debacle days, like the worst week since today was a nice relief in the morning, but up until today it was like down 3%, 4%, 2%. Nobody's talking about it. We have Greek exit is getting more and more realistic. The rhetoric is getting more challenging, less friendly. They were talking about expediting a deal. No, they were talking about the haircuts, not going to happen. So everybody's got a lot on the line, yet they're still talking big talk. So that tells me they're going to probably kick the can, and that'll probably cause a relief rally of sorts down the line. If not, look out below. But the danger still looms. We've got, the recovery here. I don't know. I think it's on track a little bit. I don't think there's anything wrong with the U.S. Strong dollar, likely to continue, but who knows? A lot of experts thought that the bonds were dead this week. Guess what? Ta-da, not so much. So a lot of givens are not really givens, okay? So if I look back on the week, these are the indices. This is the S&P, the Qs, that's the NASDAQ, and the IWM. By the way, today we recovered Dow 18,000, NASDAQ 5,000. I believe we got the NASDAQ 5,000. We may have lost it at the close, which would be embarrassing all by itself. But and the SPX 2100. You know, that hat, the party hats are getting used up. I may need to order a new set. We go back and forth. So this is a trend that I'm looking at, and this week's candle breached it to the downside big time, but ended up green, and it is bullish because it left a long tail. So did they reject it and they use it as a bounce, and will they use it as a springboard to break it out? They do have the chance to break it out next week, so let's see if they'll take advantage of it. Two red candles in the Qs. Believe it or not, it's a red candle here unless my chart is wrong, which is pretty amazing, right? But we had some heavyweights go south on earnings. But it's good that it's consolidating in here. It's right in the middle of this expanding wedge of source channel, whatever you want to call it. It still can base and spring upwards towards the 115 area. What is the scariest are the small caps, because they did breach it. Again, they rejected it just like the S&P. So the candles are not that great on the weekly basis, but they're not that bad. So we continue this meander. Like, I can draw a line across this last few weeks, right? It's kind of almost boring, but not quite. All right, so as far as the VIX is another thing, you know, I told you the VIX crush. So every time we get down here, we get some tizzy in the market. And here we are. Woof, that's a big drop pretty fast. The SPX has a chance next week to peak above this and use that as a springboard for a breakout and reach and finally close for all-time new high. Well, finally, from just recently, right? So, but to continue on the bullish trend, the MACD is looking favorable, but you know, who knows? The one thing that I was watching a while were the transports. They keep playing with this, playing with fire. I need them to get out of this. This is fire area. They finally did, and they almost recovered this long-standing green line here. But now they have 1, 2, 3 with that orange line. I want a close above it. Today they left a long tail above, which is not very bullish. And let me see if this is about oil. Speaking of oil, oil challenged 62. I think they broke 62 for a while, so it looked, yeah, 62, almost 63, but then straight down. So everybody thought oil was going up, up, up. They were wrong. Everybody thought bonds were going down, down, down. They were wrong. So nobody knows much. So you leave room for error. You don't overcommit. You hedge your bet, and that's it. Everybody thought bonds were coming down. Everybody thought rates are going straight up. And guess what? They did not. Here are rates. They went straight back to that line that I've labeled. If I zoom out to 1 year, you'll see that I've labeled it yield resistance. I've had that on for months. So overall, still a bullish market. Overall, yes, we can go higher. Overall, we've got opportunities here and there. But one thing I don't do is I don't overcommit, because I will end up getting hurt. And that's the only way I can't recover. Leave room for error. I'm fighting, the way I say it, I'm fighting the battle with binoculars. Sorry about that. So no reason for me to stand in the face of danger. The Fed is data dependent? I don't think so. I think the Fed has already made up their mind. They want to raise rates. The data is conducive. Besides, they only have CPI to worry about and inflation in the labor market, which is probably higher, and unemployment. Unemployment, they're doing their job. I mean, it's as low as can be. So the growth picture is, it doesn't depend on them, so they really, that's the only thing they focus on. And they told us many times that even if we're not at the CPI 2%, we're still going to raise rates. There are a lot of names in the news, and we won't have time to review all of them, but there are some names that should have acted better. Like Disney was a disappointment, so maybe Disney would be a good long buy. If one believes that the markets are going to stabilize from here on out and we don't have an issue, it is trading nicely, and I need it to keep above this green line right here. Today it recovered. They reported really good numbers, but they got punished hard. So maybe now they remount an effort towards highs, maybe some debit call spreads there. There were some other names that were disappointments. Monster broke trend downwards, so I'm not sure I want to chase it. I'm not sure I want to grab it. I don't want to lose all my fingers. Maybe this area was not where it needed to trade, and it was more like this area. So I will wait because it may decide to trade between 125 and 120 rather than 130 and up. I'm not going to catch this falling knife. And Yelp was in the news, not too encouraged by this price action. It had the potential to get up to here, technically speaking, from here, and then they deliver terrible, terrible report, and then say suddenly, uh-oh, somebody wants to buy them, so 2 huge candles. I can't short it, but it has the potential to break out and recover these highs, especially if they get a headline. So if somebody wants a lottery ticket, there it is, some debit call spreads there. Another disappointment was CRM. Tells me that right here it had rumors somebody wanted to buy them, and then Microsoft got tanked on that. So anyway, so that was a huge candle, right? And then we ended up pricing it up to here, and we only priced out half of it back. So that tells me there's a lot of hopium built in here, and I don't think there's going to be a deal there. Eagles are too big, caps is too big. I don't know about a perfect fit with anybody. So maybe puts there could be a good lottery ticket. Speaking of, Microsoft was the other name there, so you can see the opposite reaction there. So anyway, this is Nick signing out. If you have any questions, you know where to reach.